Welcome back to the Milwaukee Market Update. We're covering real estate news and data and breaking it down to help you understand how it impacts your real estate decisions. Teaser, will the housing market in Milwaukee slow down this fall? What to take away from this episode? What could you afford with an $1,800 monthly payment at 3% versus 7%? Have Milwaukee area home prices peaked? And why I'm giving up a 2.75% interest rate with the sale of my home. We're here to give you the info you need to make the right decisions regarding your real estate. Should I buy a home now? Should I be selling? Is the housing market about to crash? Are these headlines I'm reading, content I'm seeing on social media true or even relevant to me? I'm Ty Ash, here with Nick, the co-host, with Houseworks Collective at Compass, your local real estate experts. All right, man. Well, let's start out with some of our quick tips, starting with our buyers. Statistically speaking, fall is the best time to buy. We're now in the month of August. We're reviewing the July data here, but we've actually, at this point in time, this is where we typically see the median sales price peak. I think what we saw is last month we hit $350,000 for the median sales price in the Milwaukee Greater Area. Now we're down to $340,000. So obviously, prices are still going up versus a year ago, but we do start seeing that the days on market, the average amount of inventory on the market does start to level out and buyer demand comes back. One, because we're in the school time frame. We'll see a little activity bubble right before we get to the holidays, and then it subsides again. So those that are hungry and their number one priority is getting a home, fall will be your best time to buy a home.
Yeah, I agree with that there. Fall, and then also I think winter is a good time too. So we're kind of approaching this time of the year where prices historically are pretty seasonal. They go up in the warmer months, down in the winter months and colder months. So might be able to get a little bit better price, typically less demand, things kind of slow down. Yeah, so I'm with you. My quick tip for buyers, I would say buying a home, it's a very emotional process. You are determining your next step, where to go, to maybe build your family or downsize or whatever it is. And I would say the most that you can do to separate emotions from your decision, the better you're going to feel throughout the entire transaction. And it's easy to kind of catch yourself going into an emotional spiral going up or down. And I think the downward emotional spirals are going to be the most dangerous ones, where you kind of get caught in that feedback thought loop of what if this happens, what if this happens, what if this happens. And I think it's very important to just keep a level head when you're going through the buyer's process. And when you have a property under contract, to obviously it's emotional, it's okay to be emotional, but do what you can to remember the big picture, why you need a home, why you're moving in the first place. Does this house have what I need to enjoy my quality of life? Because that's the most important thing. I think it's just always good to keep that in mind, because it's never easy buying a home. And the more even and level-headed you can be, typically the smoother it's going to be for you as well too.
True. And with your not so quick tip, you've got Nick here talking about buyer emotions.
Yeah, it's like a whole separate episode.
There we go. Awesome. And homeowners, I think this is something that you just never think through, but if there's any chance at all that you're planning on moving next year and listing your home, the best time statistically to list your home is kind of around that February, March time frame to get that beginning stages of spring market. Everyone's excited. They've got a ton of energy coming out of the winter months, especially in the Milwaukee area. Get your exterior photos now. Get your place landscaped. You don't have to worry about having the entire inside of your home perfect. Get those exterior photos done so that you stand out in the sea of white and brown and gray listing photography. You look like the best home on the market when people are scrolling through their searches. So, look into getting that photography done now.
Yeah, I love it. I would say too, for homeowners, more of when you're selling your house, the first impression of when a buyer walks through is so important. Something like making sure that the lockbox is on the door that you want those buyers to walk through, and your agent should be able to help you with this. But if you're walking in a side door where it's kind of like a weird hallway, you don't exactly know where's the kitchen, where's the bathroom.
You have to take your shoes off, you have to take the booties off, put the booties on, and you're crammed in a room.
Versus if you walk in that front door and you've got a nice living space, views of the kitchen, first impressions are huge for someone walking through your house. also things like making sure that the home smells good, making sure that if there's any little repairs that need to be done, that you do so and focus that in that first area, because that's what someone's going to see when they first walk in. That's probably what they're going to think of when they walk away from the home as well too. So first impressions when someone drives up and sees what's the front of the house looks like. Not saying that you need to hide things to the back of the house or hide things in a bedroom, but first impressions are very important.
Totally agree. Otherwise, investors, what do you got?
I would say with investors, we talk about this a lot, where it's important for an investor to hone in on a strategy that they want to succeed with and try to find one strategy. I think also for an investor, there's going to be deals that you're going to miss. Unfortunately, that's kind of the name of the game. And the more that you could refine a strategy, the less likely you are of going to be missing deals. But I would say that it's very easy to play this, oh, that was a perfect deal. What if I would have gotten it? What if? I would say just stay laser focused on your strategy. When you find a deal, jump on it, but know that you're not going to be able to get every single deal that's out there.
Right. And honestly, if you niche down your strategy and you're looking at a more specific area, you're going to be able to have more thoughts around how to get creative to make these deals work, because you don't find deals, you make deals in today's market. And if you're focused on multiple different markets and different strategies, your bandwidth is going to be focused on what's this property going to fit into in terms of strategy, not thinking about how am I going to actually make it work, because you've already used your mental bandwidth just deciding if it's a deal or not, and you're looking at too many markets and you're spreading yourself too thin. I think that's solid. So now let's transition and dive into the numbers for our local market here in Milwaukee, obtained through our MLS. Just starting with the market overview. So new listing activity, 1,700 homes, down 21%. That trend continues of really slow new listing activity compared to a year ago. Same thing as last month, pending sales, 536 homes, up 18%. So we're having homes come off the market faster than what they're being listed and how many are actually available, active on the market. Closed sales, just under 1,500 homes, down 20%, pretty much in line with that new listing activity, one in, one out. And then days on the market until sale, 15 days, down from 17 days a year ago. We're seeing activity happening much faster. And then median sales price, $340,000, up 8%. Very consistent to what we've seen all year, but down $10,000 from a month ago. Again, we're kind of entering that fall seasonality where prices will kind of come down a bit as we see a little bit less activity on the listing side, potentially on the buyer side as they get busy with going back to school, holiday season. Average sales price, $400,000, up 7%. Percent of original list price received, 103.2, up from 102.7% a year ago. So we're seeing offers still coming in over ask. Inventory of homes for sale, 2,600 homes, down 25%. So continuing to see low inventory levels, and we'll see in kind of the line chart, we've just flatlined in inventory, and it's just significantly lower from what we've seen the last few years, and specifically prior to pre-pandemic timeframes. And finally, months of supply of inventory, 1.7 months of supply as opposed to 1.9 a year ago. Inventory going down, not enough new listing activity coming in. The four that we're going to dive into here, very first right off the bat, new listings. I mean, we're looking at essentially 12 straight months here of being down at least 20% of new listing activity. And just like what we saw in the median price, where we went from 350 peak down to 340 in terms of median sales price, now we're seeing the quantity of new listings start to go down as we expect to see with seasonality. Any other notes in terms of what you're just seeing out there anecdotally for new listing activity?
Yeah, I mean, it's kind of been the same story this whole year, where inventory is very tight. What has been nice, though, as we've been approaching basically till July, is there has been more inventory this month than the prior month. And now with the seasonality of Milwaukee, with the winter times, and just the seasonality of any real estate, it kind of slows down a bit more in the fall and the winter timeline. And so what I'm really curious to watch too is now that we're going to start to see inventory decline just because of seasonality, what that's going to mean for the market. Because right now it's competitive for buyers. There's still a lot of buyers that we're working with that are very much looking to purchase. Demand is still extremely high, but new listings has really been what's caused all of this demand because there's a lack of it. And so as we see this new listing in inventory decrease now month over month, which is what we should expect to see, I'm kind of curious to see what that's going to do for price and demand as well too.
Yeah. What I'm hopeful for is we kind of go from new listing to like active inventories available for sale. Our rolling 12-month average right now is down 20% in inventory compared to a year ago. Again, flatlining. I do think that we're going to see activity slow and be more seasonally normal here in the Milwaukee market. I'm curious to hear your thoughts on that. But I think it's going to be a good thing, a good opportunity for buyers. However, I think something we might see and what I'm hoping we see in the numbers come through the rest of the year is potentially new listings, not in terms of the number being super high, but improving as a percent change to last year because we are going to start lapping 7% interest rates from a year ago. Yeah, rates are still sitting around that 7 to 7.5%. We keep bouncing around with some volatility, but the hope is we get more active inventory from most sellers are also home buyers themselves and actually seeing maybe some newness, some move-up buyers, some downsizing buyers, maybe people deciding to finally take that job and relocate or whatever else or update the size. That's why I'm hopeful to see. What's your thoughts in terms of what we think we'll see the rest of the year?
Yeah, it's weird because it's like the longer that the longer that interest rates stay where they are in the sevens, right now it's very tight for someone wishing to sell their house because they're at a great 2, 3, 4% interest rate, which we're going to talk about that later today. But the longer that interest rates stay at that 7% range, the more we're going to start to see new inventory. Because like you mentioned, if someone bought at a 7% interest rate, for them to sell to then rebuy at a 7% interest rate, it's a net wash. And so do we want to see that happen?
No.
Probably not, because it would be nice to be able to see interest rates go down, which I think is going to unlock a lot of inventory in the market. It's going to also allow a lot of new buyers to re-enter the market too. But that's a really good point that you brought up.
Yeah, I totally agree. And then the last piece, closed sales. I mean, again, we saw active inventory right now is down 20%, closed sales down 23% on a rolling, 12-month average here. We're seeing that we're selling slightly less compared to last year compared to the inventory percent that we're down. Usually that relates to essentially getting more months of supply and some climbing of inventory. But we're just not seeing that right now, mostly just because the last 2 months of pending sales kind of just jumped through the roof. Some of these people, and I think maybe that's that return of seasonality, that last push in the month of July to get into the new school district, we might see that come back and normalize and be a little bit more aligned with the closed sales. So those are some of the highlights that I think I saw as we looked through here. Other than obviously median sales price, again, we've hit our all-time high here in the Milwaukee Greater Area at $350,000 last month. Coming down now to $340,000. That's like not a concern. If you see any news articles are like Milwaukee home prices went down month over month, big concern. Make sure you read the numbers.
That's the headlines that I saw. I think as soon as this data came out, I saw Milwaukee home prices decline. Was it 5%, whatever? That happens every single year. Every single year that happens. That's nothing new. It's part of the seasonality.
Yeah, and just so people know to expect.
It's still up year over year, though, which is kind of how we look at this from the market and average pricing. Month to month, it's gone down. But if we look at this month compared to last year, this month, it's up.
Yep. That's great. I mean, if you look at last year, July's price last year was $315,000. This year, $340,000, and then it went from essentially $315,000 to $300,000. A little pickup in September to $310,000. So again, that's that last little push where buyers re-enter. There's going to be opportunities here this month, especially with some negative sentiment around some of the interest rates climbing. So if you're looking to time the market, not saying that's possible, statistically speaking, right now. And then as we get into kind of the tail end of October, November, December. All right, now pivoting a little bit into the investment space. So two-family in Milwaukee County. Starting with absorption rate or your months of supply, we're sitting at 2.2 months versus 1.7 months a year ago. So we're actually seeing a good amount of pickup there. Again, healthy days or healthy months of supply is closer to 4. We've been in low inventory circumstances here for the duplex space for quite a while. Then we've got the median sales price. We're sitting at $190,000 versus $183,000 a year ago. That's up 4%. The prior 2 months, in May and June, we actually saw, almost closer to 15% year-over-year price growth. So nice to see that easing a little bit for those people looking to go out and get deals. However, obviously this is a smaller subset of data, so there's a little bit of volatility of It could just be that we sold more of the lower than the median
inventory.
price
Yeah.
inventory homes. But still, year to date, we have seen that pricing has gone up 14% for the median sales price. Median days on market, 6 days, under a week, compared to 9 days a year ago. Any notes that you have in terms of like what you're seeing from a price? I know we talked a little bit about that last month.
Yeah, I mean, most of my business is working with duplexes. So the thing that I've noticed is that there was a period there where it felt like month over month, duplex prices were just going up and up and up.
Skyrocketing.
And what
yeah.
used to be the average price at like 150, 160, all of a sudden was at 180K. And so to me, I do like that from investors that I work with. Obviously, the lower the purchase price, the better the numbers are going to look. So I like how month over month we are seeing that price soften. I think that too, we look at this inventory, and I don't think we've spoken to the changes of inventory of active listings. We're still down significantly.
Yep.
Year to year, about 35% down.
Yep.
And Milwaukee has so much inventory of duplexes where when I work with a buyer that's out of state, they look at all the available duplexes for sale and they're like, why are people selling these cash flowing properties? What's wrong with them?
Yep.
But it's because Milwaukee has such a large inventory of duplexes where we have so much for sale already and we're down where we were last year.
Yep. Totally agree. And I mean, I think different from the single family space where people, once you lap those 7% rates and you're having an easier trade-off when you're moving, for these investment properties, these aren't going to typically be forced sellers where, I'm relocated or, no, I need a bigger space. Like, no, a lot of these duplexes are bought as investments. They don't live in them. Some of these investors don't even live in the state just because they're uncomfortable. I mean, if they move or if they're not self-managing anymore, they're just going to hire a property manager. So I think this is a place where we don't see the new listing activity recover as well as we see in the single family, just a traditional buyer seller space. Yep. And then last, to kind of wrap up the MLS stats for the duplex space, sold listings down 37% to last year. I think, again, big factor of that being because of the active listings being available to buy. Pending sales down 60%, so less offers accepted last month. I think this mostly speaks to the content of the inventory. If the inventory that's out there available to buy is in dilapidated condition, less desirable, I think that can drive some of the days on market up a little bit more. But in this case, if it's the same inventory that people saw a month ago and there hasn't been any sort of price adjustment when everybody's seeing frenzy out in the market, we're just seeing a little bit of slowdown on what's gotten accepted. But
yeah, one thing that I will say too, the median days on market from 9 to 6, that's only a 3-day difference. But I would say duplexes that are priced well, that are in highly sought after neighborhoods, are moving quick, super quick, within 3 days. Especially if you're in like a West Allis, a Tosta, a Shorewood. So it's tight right now for duplex buyers, especially if you're one that's looking to house hack specifically, because that's typically where they're looking at. And you got to be on the ball. You got to like day one get a showing in there right aggressively. And so I don't like seeing that from the buyers that I'm working with perspective, to know that from 9 days to 6 days, still looking at now like less than a week that you have to go and see that and get an offer in. And if that's the median too, that means that there's a lot that are happening under 6 days,
Yeah, absolutely. And I think the advice we always give our investors is like, your job as an investor, especially a new investor, is just to run your numbers every day. Because making a decision in 24 to 48 hours, including getting out there, doing a showing, running your numbers, it's fast moving. And there's a lot of people that are experts in these markets because maybe they've bought before. If you're not running your numbers, getting used to what you see and knowing exactly which ones you're going to jump on, you're going to feel like it's impossible to get a deal done because there's just too much money or there's whatever excuse you want to make. It's very simple to know you will be able to pull the trigger if you've ran enough deals and you've seen the outliers of when is this a good deal. And you already know once you've seen it and run your numbers, okay, this is what it's listed at. It's a marketing price. I know what works for my numbers. Let's go see it, check it out, get that visual kind of rough inspection kind of done with our eyes, and go put in the right offer. Like, you're only going to be able to move that quick if you've actually ran your numbers before. And to kind of wrap up what we got here for the investor statistics from Rentometer, we pulled the Milwaukee County average median rents, as well as the 25th percentile and 75th percentile, something we just want to report on each month so we can kind of track and see how is that going up month over month or year over year. right now in the Milwaukee County. This is for home rentals, so this includes duplexes and single families. Here in the Milwaukee County area, $1,200 is our average rent, $1,100 sitting at the median. On the lower end of the rental comps, we're seeing $950 per month. And then on the higher end, 75th percentile, nicer finishes, potentially more desirable locations, sitting right around $1,450 per month. Obviously, these rent prices are great, especially if you're looking at a duplex. That if we're looking at a median purchase price of a duplex being around $180, and we're potentially sitting around $1,000 a month or so, we're definitely on average or at the median here in our market for a duplex finding 1% deals, which has always been one of the big draws of our market.
Yeah. I like how you have this rent distribution chart put up here as well too, which basically just shows at different price rent intervals how much inventory there is at that price.
Yep.
And what's interesting to see for this to me is that between the 770 and the 960 number is where most of 2 bedrooms are rented at, which to me checks out because most duplexes, most 2-bedroom units are not going to be at that high price point. They're going to be in different neighborhoods that are going to be within there. And that's typically what I see within the market too. So I think like the median, yes, is 1,100, but most of them are going to be closer between 760 to 960 for 2 bedrooms.
Totally agree. So we'll keep an eye on that. That way we can kind of see the trends, month over month, year over year. I think we covered this. I mean, it's more of the same what we talked the last few months in terms of what do these stats mean for our buyers, our sellers, and investors. I think there's opportunity for buyers coming up. Sellers, I think you're going to see a little bit more normalization of maybe not, people flocking into your home. Obviously, there's going to be the outliers of the beautiful home, really well marketed, great listing price. But I think we might see a little bit more of there's only a few offers on the table. There might be more negotiations during the offer writing phase and maybe more normal contingencies in terms of not as many people having to waive inspection, not as many people having to put as high a dollar amounts on the not to request. What's your thoughts in terms of what we think these stats are going to mean for the rest of the year?
Yeah, it's hard to say because I think we talk about how it might be softening up for buyers. And what I've seen in the last couple of weeks is it certainly doesn't feel like that. It certainly feels like anything that we're riding on, it's competitive. We're trying to get in there first to see, We're trying to get in there first to see it. We're trying to write good offers. I hope that happens though. I hope we do see some softening. I would say kind of what I have seen though with a lot of the single family homes is homes that I would expect historically to only be on the market for 2 to 3 days and have an accepted offer well over seem to not be getting that right away. It seems to be more like
5 to 6 days.
To 6 days at list price. It's not this bidding war like it used to be at the start of the year. So that might be kind of a shift that we're slowly starting to see.
I think the shift that we're seeing is similar to the shift we saw at the tail end of 2022 around it varies by price point. Where we saw last year homes above $500,000, which is a good amount above the median price in our area, started seeing a little bit more slowdown, higher days on market, fewer offers on the table because of the impact of interest rates. And as those interest rates have remained elevated at the 7%, I think that we're starting to see more and more people get to terms that they're just not going to snap back down to 4 to 5%. And they're taking the 500K buyer is going down to 400, the 400 person's going to 300. So as we look at, some of the average price points that we work with our first time home buyers between 200, 300, all those people are just getting squeezed into the 3-bedroom, 1.5 bath that's at $250,000 in the West Dallas, Milwaukee, and same thing on the duplex space. So I think it's a squeeze where there's more competition at the lower end of our price point, below median price, and there's a little bit less on the upper side.
Yeah.
So knowing that and being able to prepare for where your price is and what you're pre-approved for, that's probably going to be an indicator of you might have a buddy that had a higher price point. They're looking and they're like, oh, it's easy. You can negotiate. And you go in, you're like, well, what is this anarchy I've just got myself into? I think it's going to vary by price point for sure. Otherwise, just taking a quick pause. What other stats are you looking for more information on? Please ask us in the comments below. We'd love to give you our take on what's coming up in the real estate market. And next, we'll kind of dive into some local Milwaukee news headlines. So I tracked this down just through one of the Google alerts. I got the Mayfair Mall, not too far away from our office here. The old Boston store property. Sounds like we have a property redevelopment plans that include 900 apartments. So that's definitely an interesting take. I feel like that's what everybody's saying is going to be the future of commercial real estate is, well, we've got housing shortages. So let's just toss a bunch of apartments in there. Any thoughts that you have in terms of like the, potential of that plan working out? Do you think we need more 1 and 2 bedroom apartments out there that are in this like general Tosa area?
What it feels like is the trendy thing for developers right now is creating those luxury apartments.
Yeah.
Every apartment that's new is a luxury apartment.
Yep.
And they're typically pricey. Typically they're 1 to 2 bedrooms that are priced around like $1,600 and up.
Yep.
And I think there's a demand for that, but I also think that there's going to be money in that for developers because that's just kind of like been the classic style. You're driving around downtown, you've got like the 5-story building, you've got commercial
it's the
on
same
the front,
thing as every
4
single
on the top.
Same thing as every single family new home build is $600K plus. Is there's just more profit on going after Class A, rental apartments.
Yeah.
Yep.
So I think that there's still a demand for that. Obviously, they wouldn't be doing it, but I would love to. I feel like there is a miss in the market for those affordable apartments that are nice.
Mm-hmm.
I would also love to see some of these become condos. I don't think that from a development perspective that's as profitable as apartments go. It's going to be interesting to see though if this becomes a trend across the U.S. Of them converting these malls that have now turned vacant into something that's going to be actually like a usable space. And so I think apartments are one option. I think turning this into like a nice park or like a green space would be kind of fun as well too. There's no money in that obviously, but what are your thoughts on this, man?
I think it'd be cool to see how they actually execute that because it's obviously a big box.
Yeah.
That you're like, how do you actually have anybody with windows? So I'm wondering how they make that kind of almost like, is there like a pedestrian mall in the middle, open space, windows, almost like.
Do they keep the Abercrombie and Fitch there?
Yeah, right. Well, yes, you can just go straight from your apartment and do some shopping. Yeah, it'll be interesting to see that. Obviously, parking's no issue over in this area, and I wonder if they convert some of those spaces into like green spaces, dog parks, like heavier
it turns into like
heavier
a
amenity
community
space
kind of space,
for sure. And then next up we got here is, how does Wisconsin rank within the U.S. housing market? So what we've got here, article from the Milwaukee Journal Sentinel. So essentially a couple little stats I pulled out here is obviously they kind of started doing some comparisons. Sometimes it's very hard to compare us to things that are going on in the East Coast, the West Coast, higher price point markets. So here's something that was cool. In 2012, only Iowa, shout out to Iowa, had a lower median home sale price than Wisconsin. But in 2023, only Minnesota had a median sales price that was higher than Wisconsin. And the two things that are driving that right now, I think Madison has a huge driver of being one of the highest increase of essentially prices going up in the market. But obviously we've been slow and steady, being anywhere from 8 to 10% year over year over year. They go into some of the other markets. So some notable cheaper markets: Little Rock, Arkansas, I believe; Cedar Rapids, Iowa; Topeka, Kansas.
Hey.
Yeah, you used to frequent that spot. Wichita. Oh, sorry, my mistake. Same thing though.
Kansas is all the same.
Yeah. So the big thing they're calling out here, things that we've called it before: why are home prices increasing in Wisconsin, and like how do we stack up? We're seeing that we're trending well compared to like our Midwest local kind of region here. Mostly because of the same reasons other markets trending up is low mortgage interest rates, locking in buyers. But I think what we've also gone into is the people that are coming here to Wisconsin, they're moving here for a reason. It's not just like, oh, let's just go there. I've heard that it's great and beautiful warm weather. It's we've got jobs, we've got opportunities for people to come here, and overall we've got the more space, we've got things that people desire for growing families, as well as the job opportunities they want for bigger Fortune 500 companies. Any news headlines that you saw here in the local area?
I've got one for the National.
Okay, let's dive in.
We want to dive in there.
Heck yeah.
So I think a big topic recently has been inflation. Less about inflation now and more about interest rates and how is the Fed responding to inflation with interest rates. And we saw that there was another rate hike. I believe it was last week or 2 weeks ago.
Yep.
Everyone was kind of fingers crossed, hoping for relief. Didn't happen.
Yep.
And so right now it's probably considered one of the most unaffordable times to buy a home. And
Definitely.
There's a chart that we have here that talks about if you were to buy your home prior with a lower interest rate versus now with the current interest rate, what your home purchase price looks like. Where we are today, if you were to use an 1850 down payment with an interest rate in like the high sevens, a 280K home is what you're looking at.
Yep.
Compared to years ago when we were in the 2s and 3s, you'd be looking at a $462,000 home. So it's about a $180,000 price delta between what you were able to afford compared to now with these different interest rates. And I think when you spoke to how it's become so competitive for buyers at that like sub 400K price range, this is why.
Yeah.
It's because everyone is kind of getting pushed into a box of, I need to buy a home. This is my affordability now. If this was 3 years ago, someone had a budget of $460K, they have a lot more options.
They have a 3-bedroom, 2.5 bath, pick your suburb, and they're like super satisfied with that. With that
if they wanted to settle
payment
for a $300,000 home, they find a $280 home that fits their needs, they can make it work. But they could stretch up to $460 based on just affordability. Now they don't have that option, unfortunately.
And now today they're buying the starter home, 3-bedroom, 1.5 bath, probably, West Dallas, maybe Milwaukee on the border of Tulsa or in Bayview. Like you're finding, you're adjusting on location, you're adjusting on the amenities you have in terms of bathroom count, maybe garage. You're just not getting what your buddy got a couple years ago, but that's just the norm that we're in. Yeah.
Yeah. So that's all I have to say about this. Is I think this is kind of one of the reasons why we're seeing that it is still competitive at like the sub 500K price point.
Right. And interest rates, we've got a chart up here as well, again, from our buddy Bo, who always brings some good stats and information to our team meetings each week. 30-year mortgage rates did hit the highest level since November of 2000 at 7.5%. So we're seeing that rates are staying higher for longer. However, housing market continues to remain resilient. It's kind of like gas prices, where after a while you just kind of start getting used to it. And with the low inventory we've had here in our local market, at least, housing markets remained strong. I think if we get into this circumstance of, we're having maybe more inventory come because sellers are used to that percent, we might see a couple strategies come back, like the 2-1 rate buy down, where sellers like, well, I still want the price of, median $350,000, but I'll give you a $8,000 credit to buy down your rate for a couple years to ease the pain until you get the opportunity for a refinance. So yeah, definitely, no one likes to see that. I think it's just like gas prices. As soon as it hits $4, everyone's like, oh my gosh, like the world's falling apart. But I think after a while, people settle into these and just realize, I think just to like bring this to terms for our local area, we've also got the Zillow Home Value Index compared to the Zillow Observed Rent Index. Milwaukee sits in the top 5 markets in terms of home values going up year over year on a relative basis. This is more focused on homes from the 35th to the 65th percentile. So like your typical home is how they describe that, going up in value by 5.2%. And if you're like, well, shoot, it looks like it's going to be a better deal just to rent. If we look at the rent index, Milwaukee, again, in terms of increases in rents year over year, we're sitting at around number 7 or 8. At, again, 5.3%, pretty much right in line. What you will find, and this is typically the case, usually rent prices lag behind your home prices going up. So even in the short term, it feels more comfortable. It is probably about 50% more expensive to own your home as a monthly payment, but that payment's locked in for the long term. And usually what we see after about 5 years, your rent payment will be the same as your mortgage payment today at 7% rates, but you no longer have the opportunity to refinance a loan and actually see your monthly payments go down.
Yeah.
So putting this all in, that's usually like our argument to say, like, it always makes sense to buy. There's always a good market to buy. And a lot of that's because of the cost of rent going up over time.
Yeah. Yeah, I think a lot of this talks about, too, how just the Milwaukee market, to me, it's very, and we talk about this all the time, it's very insulated from a lot of what's happening nationally. And you just kind of spoke to it, too, in regards to like the headlines about how does Wisconsin and Milwaukee rank in the housing market. And then you compare it to this of price appreciation and rent appreciation. And again, like Milwaukee isn't like a destination city. I don't think any city on here besides maybe Miami, Ohio is a destination city. So it's kind of interesting that the cities that get all the national attention are those cities that are the destination cities.
Yep.
But the ones that are like progressively seeing appreciation in prices and rent demand aren't normally those ones.
Yeah, and I think what we've seen in past markets is it's slow and steady. Like there's just less risk with that. Becomes you are not going to see those aggressive price jumps. But on the inverse, like you can be more secure where when everybody's talking about, oh my gosh, values went down by 20%. Yeah, when that happens in Milwaukee, it's like, oh, my price went down, 3%, which is like, $9,000 on the average home here in the Milwaukee area, which no one wants to feel like they've got $9,000 taken out of their pocket. But usually the blow is just so much smaller because our price is so much more affordable and so much more reasonable. So transitioning into some more of our like national topics, inflation definitely is, I would say, I felt like it kind of like fell to the background because people got tired of saying, oh, great, it went from 8 to 6 to 5 to a big jump down to 3%. And now I feel like it's almost returning back to the scene where, again, this last month in July, I think we came in at 3.2% versus expectations of being, let's see what it was, 3.1. So we're pretty much spot on for what their expectations are. I think people want to see it go down because they were fearful that if we saw an increase, that the Fed was going to increase their rates and keep on going because they have that target of 2% inflation. What we have here is 4.7% core inflation. So that's excluding the more variable, volatile food and energy buckets, and shelter still remaining at 7.7%. That keeps on being the one that all the economic experts are saying, well, at some point we're gonna lap, and the stickiness of that's gonna go down. Haven't seen it yet, so we'll continue to monitor that and see where those shelter costs of that cost to rent and affordability housing hopefully lapse, and we're not seeing as aggressive price increases year over year. Obviously, we've been seeing rent increases here in our local Milwaukee area, so take note of that. But on the national level, we might see that inflation rate starting to subside a bit.
Yeah, one thing I think that's pretty interesting with interest rates this year is the last time we had like a financial crisis, 2008, housing was the cause of that crisis.
Yep.
Like it was banks that were giving loans to people that couldn't afford them.
Yep. Teaser rates.
Yeah, They were walking away with $30K at the closing table, buying a home. Taxi driver. I mean, we've all seen The Big Short. Taxi drivers had like 4 vacation homes in Florida that were all, and so that was the cause of this. That 2008 crisis was the home industry and the housing industry. This is now, the housing industry isn't the cause of why interest rates are going up. It's inflation. But now it's kind of been, I feel like the Fed didn't really know how housing was going to react to this. And so it's kind of been interesting to see this play out where the housing industry is now kind of a byproduct of where's it going to go now that we're raising interest rates. Because housing has been rising in prices. I don't know.
Yeah, we'll see where it goes. I know the biggest thing they're tracking right now is if the labor force continues to remain strong, that means people are making money to continue to spend like crazy. And the biggest thing I'm hearing from other sources I listen to, and like other guys who are just following the market, it's so many people locked in their biggest monthly expense of housing. And now they have this huge backstop in some cases of equity and home equity line of credits where, we're still seeing that like inflation adjusted like credit card debt and all that stuff is actually lower relative to pre-pandemic. People don't have as much debt there, relatively speaking, but now they have this great fixed cost that they're just like not wanting to get rid of. So people just have more comfort with continuing to spend. That's just going to be harder to adjust and just like attack with interest rates because people still just want to buy. So companies are going to continue to make. So companies are going to continue to hire. So we'll see where that continues to track. Mortgage rates. We have the average as of the 17th at 7.09%. Again, hovering right between 7 to 7.5. As of today, from Mortgage News Daily, we're sitting at a 7.37% as of 8/17, with better rates as you look at a 15-year fixed. Again, we're probably going to be seeing ourselves bump between these 7 to 7.5% rates. We're still seeing those spreads to Treasury bonds actually be like around the 3%. So there is room someday for these to come down to the high 5s into the low 6s and be more consistent and more affordable, which could bring in some more buyer demand. But they're really waiting to see when can we stop these interest rate hikes. So it'd be interesting to continue to track those. But otherwise, I know we've kind of talked about it from the statistics side. Anything in these news headlines that you think are just important for buyers and sellers, investors to track over the next month to the rest of the year?
Yeah, I mean, I think the big thing is interest rates continue to really hurt the amount of supply that we have in the market, and all stemming from inflation. And it feels like the Fed has done the opposite of what everyone thought that they were going to do. We thought there's no way that they're going to keep interest rates where they are. There's no way that they're going to raise interest rates
because
from
we
where
thought
they
they
are
were going to
now.
break it, and they
Yeah,
haven't
and
yet.
at one point they kind of did.
Yeah.
And so I feel like we're back to having that conversation again, where like it's starting to become the normal interest rate is going to be in the 7s, and I think buyers are starting to become okay with it, especially if you're a first-time home buyer. They don't a lot of times know what it's like to buy at 3%.
Yeah.
So it's starting to become. I feel like I'm getting less pushback on interest rates and where they are.
Right.
But it still doesn't mean that it's easy for a buyer to buy at a 7.5% interest rate.
That's right.
So yeah, I guess something I'm continuing to watch. I do think as soon as rates go down, if they do at all, there's going to be a massive influx of inventory and of new buyers that are sitting on the sidelines to get back in. So we talk about too, like, it's competitive right now, but it's competitive because there's not supply.
Yep.
If rates go down, it's going to be more competitive, in my opinion, from trying to acquire a home.
Yep.
And so for as competitive as it is, if rates go down, it's going to be even more competitive. And if rates go down, you own a home, you have the chance to refinance at that point too.
Yeah.
You're taking a gamble that rates will go down. At some point, they have to go down. But that's kind of my thoughts.
Yeah, I agree. I think a lot of the themes that we tracked, the biggest thing I'm focusing on, which I'm sure you'll hear about, is if the labor force remains strong, we're just going to see more of the same. And obviously, I feel like we're just going to get really positive sentiment as soon as the Fed actually announces they can stop rate hikes. If something does kind of start breaking or we see some negative news.
Yeah.
But unfortunately, if you're nervous or concerned with buying or you're selling your home right now, there's always something to be worried about. There's always a new negative news line, whether it's the interest rates or if it's, oh, well, shoot, now the recession is coming. If it makes sense, again, it's always, all the D's of, degrees, diamonds, all those kind of diapers, having those factors are going to return as soon as people are like, I'm not going to be just stuck in this home forever because of an interest rate.
Yeah. I mean, it feels like the Fed's goal right now, unfortunately, it's to kind of break the economy, which is they're waiting for unemployment numbers to go up.
Yeah.
Which is so messed up.
Yeah.
It's really sad. But when the couple banks folded, the Fed helped them support it through that. When unemployment, if it goes up, there's no sort of Fed help or government help for it. And so it's really tricky because they want to see the economy slow down. They want to see unemployment rise. And it sucks that we're waiting for that to happen to see a relief in interest rates.
Yep. Yeah, and no one wants to feel like they're rooting for that.
No,
and you're like,
I'm not rooting for that.
And you're crossing your fingers that you're not one of the people that gets.
I would rather have high interest rates in the employment market strong.
Yeah.
Because to me, that's like a better quality of life for everyone.
Yeah.
Because I don't want to root for higher unemployment. That just doesn't feel like the right thing to do.
But it comes at an expense of higher housing. So
yeah,
that's what we got. Well, otherwise, what's new? What have you been up to this last month?
I was down in New Orleans last weekend.
Nolans.
Yeah.
What did you guys do?
It was my mom's 60th birthday.
Okay.
Her and her
sure she
best...
appreciates you mentioning that.
Yeah. Hey, Mom, love you. She turned 40, actually.
Yeah, great.
It was my mom and her best friend growing up. There was 15 of us down there, my family, her family. And it was 120 degrees.
Awesome.
So it was really hot.
Cozy.
Yeah. Also, there's no air conditioning down in New Orleans anywhere. But we went on a gator tour. Got to see some alligators. Our guide actually touched an alligator that was in the water and picked it up under its mouth and it tried to bite him. But yeah, it was a good trip. Yeah.
Awesome.
Yeah. How about you? What you been up to?
Oh man, it's been fascinating. We've had a couple of weddings that we've been going to. Got a couple trips coming up for some bachelor parties going down to Houston, so another really nice and toasty location.
Nice.
But most interesting thing we've done is we've got accepted offer on a new home, and then we're selling our own home, so we've got accepted offers on both and moving forward.
Yeah.
So we're excited about that. So I'm sure I'll be letting people know it's like there are reasons to move, and for us it's location driven of why we're moving to a new spot to be closer to family, to the amenities we want to be close to. But I've been super busy with that.
One thing I want to share about that is I feel like as real estate agents, we get used to a transaction. Like we understand buying a home, selling a home. It's what we do for a living, is we help our clients buy and sell houses. We're not the ones that are buying or selling the home. We're guiding and we're advising and we're providing education to help them do so. And you have, I think, had this really large awakening of kind of forgetting what it's like to actually buy and sell your own home, and like the nerves involved and the feelings and there was a day that I saw you last week where I thought you were going to collapse because of how nervous you are, and refreshing your phone. And so I think it's just a good reminder of what people go through buying and selling homes.
Yeah, I think every agent should buy and sell their own home every single year, just to be reminded of the emotional duress that you go through, the excitement when you get the accepted offer, the awaiting getting the inspection. Then when you sell your home, the second it goes live, you're like, why don't I have 5 showings?
How many listings? How many showings today?
Come on, let's get on going. So
but cool,
awesome. Well, if you found value information that we just covered here in the Milwaukee area, please subscribe, hit that bell notification on podcasts. Go make sure you give us a 5-star review so that more people can find us, and so when we post our next market update. Thanks, and we'll be back again next month with your Milwaukee market update.